Hello, hi, and welcome to the market update from 26th to 30th of August 2024. So, in this video, we'll not restrict ourselves to just the weekly update. We'll talk about the monthly update also. So, let's start with the usual the update from the world. The European Union, the inflation for number for the European Union has fell sharply from to 2.2 in the month of August, which was 2.6 in the month of July. This was backed by the energy prices fall, which make it easier for the ECB to cut rates. News coming in from US economy. The US economy has expanded at the rate of 3% in the month of April to June quarter, which was higher than the estimated number of 2.8%. In the first quarter, the economy had grown at a rate of 1.4%. The core personal consumption expenditure price index was released on Friday morning. This is a Federal Reserve's preferred inflation gauge, which show that prices rising has risen by 0.2% in the month of July, largely as expected. Although the year-on-year increase came in a tick lower than the consensus, which was at the 2.6%. So, giving an overall good picture on the Fed would cut the rates in the next coming week. On the US 10-year Treasury bond yield, the 10-year Treasury bond yield still traded below the 4% level at currently at 3.8, 3.9, a bit higher from 3.8 in the last week. If we look at the overall markets in the world, the markets in the last week were again positive, where we could see the US market was positive, the European market was positive, the Asian market was also in the green zone. Overall, in the month, if we see that the US markets were close to the S&P 500 was up by 2.28%. Nasdaq, which had seen a major fall during this month, was still ended positive on by 0.65%. The European markets were up by 2%. The Asian markets, GIFT Nifty was up by 2%. Nikkei was added in green by 0.3%. Hang Seng market was up by 5%. So overall, the markets were fairly positive during this month. India came out with the GDP numbers. There were a few points to be noted here. The GDP growth in the Q1 for financial year 25 moderated to 6.7. This moderation is compared to the last quarter, where the GDP grew by 7.8% and 8.2% in the June of 2023. So we are talking about the real GDP number here. The GVA growth came in at 6.8% in quarter one for financial year 25, higher than 6.3% growth witnessed last quarter. Now, with this numbers coming in, the divergence that GDP and GVA that has been showing for last two quarters has been minimalized. So we can see that GDP is growing at 6.7% and GVA is at 6.8%. The growth was this growth in the GDP was supported by the industrial and the services, which grew at 8.3% and 7.2% respectively. Agriculture though showed a recovery at 2%, still was behind its average, its overall average. In last few quarters, the agriculture was showing a negative, not a negative, but a very slow growth at 0.2% because of the rainfall distribution in the last year, but this time the agriculture output is showing a recovery at 2%. Industry, the growth was in the industrial segment. The growth was supported by construction and electricity, gas and water supply, which grew at 10.4% and 10.5%, whereas manufacturing activity had grown slow at 7%. Services were supported by public administration, defense and services, and grew at 9.5%. On the consumption side, if we see, the private final consumption expenditure saw a recovery at 7.4%, while the government final consumption expenditure was negative at growth was negative at 0.2%, which shows that the government expenditure is now decreasing. Even the gross fixed capital formation expanded during the quarter by 7.5%. The recovery in PFCE and the GFCF does signify that the passing of the baton from the government to the household and the corporates has started, which could be a reason, which could be seen in the reason that the consumption in the electricity, gas, and water supply and the utility service and construction had increased. But rural consumption is still a challenge, as agriculture output remains still remain slow in progress. If For the last week, the oil prices traded at 78.82 a barrel, which is down by 0.25%. Gold was down by 0.2%, trading at 71,633 per 10 grams. Let's check the FII's DII activity for the week. FIIs were net buyer. They bought close to 9,217.29 crore worth of equity. DIIs were net buyers, but they had slowed their buying at 1,198.27 crore worth of equities. So the conducive environment because of the oil prices going down and the US Treasury bond yield down has been causing a movement in the FII activity in the Indian markets. As a result of this buying into equity, though when the month started, there was a lot of selling the FIIs done, and FIIs for the month was again net seller at 21,368.51 crore worth of equity, whereas DIIs bought 44,276.66 crore worth of equities. Now let's check how the Indian market was performed in the weekly and the monthly basis. Buoyed by this high activity from the FIIs, the Indian markets were positive for the week. The broader Sensex and the Nifty was in the range of 1.5 to 1.66. Nifty Bank was up by 0.82%. Nifty Mid Cap was up by 1.25%, and Nifty Small Cap was also up by 1.19%. The monthly performance, we started with on a very bad note because of high FII selling, and due to this and helped by the FII selling towards the end of the month, we saw that the Sensex closed in a positive zone at 0.76%. Nifty 50 was up by 1.1%. Nifty Bank was down by 0.3%. Nifty Mid Cap was up by 0.5%. Nifty Small Cap was up by 0.8%. So let's see how the valuations on the indexes are right now. Nifty 50 trailing PE is at 23.5, above 2 years average and 5 years average. Still a bit high. Nifty Mid Cap 150 trailing PE is at 42.2 at 2 years and 5 years high. Nifty Small Cap 100 trailing PE is at 30.3, nearly 2 years high and just above 5 years average. So if we even look at the Buffett indicator, which shows how the total market cap by the GDP is varying, it's showing that the market cap as of now is modestly overvalued. If we move to the Indian bond market, the bonds are relatively stable. 10-year government bond are relatively stable at 6.981%. The yield curves, if we look at in the short, medium, and the long term, are still flat as of now. So that was all from my side. Hope you enjoyed this video. Do share, subscribe, like to our channel so you can get weekly updates from us. Thank you.